if you're using leverage, you are going to get blown out and you're going to lose control of your tokens. That is rule number one. Do not lose control of your tokens. Do not use leverage. Don't FOMO and don't get fearful at the wrong points in the cycle. We have a framework. It's there to help you. We are still early stage within the final year of the crypto bull market when a lot of the big gains come. It's time not to lose your shit. Have patience. See the bigger picture. Also, how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course. And you're saying to me, oh my God, my fucking portfolio is down 80%. It's because you're not using the don't fuck this up thesis, which is you can only have a small part of your portfolio in the smaller tokens. Yes, I also understand that Solana is down 55% or 53% today. And it's painful for many of you because Solana's a big position. And let me show you why and how. So I'm going to run through some charts for you that Julian and I put together specifically for you. These are from Global Macro Investor, which is my preeminent research service. Firstly, the chart that everybody knows about. This is the chart Julian and I came up with, Global M2 in dollars with a 10-week lead over Bitcoin. Now, we were not sure whether it was going to follow this exactly because we had an identical setup in Global M2 in 2017 in the last Trump cycle. And what happened is crypto collapsed 35% in a week and then slowly recovered with CHOP. I wasn't sure whether we were going to have the full sell-off to follow this pattern or we were going to go sideways over the period. We eventually went sideways first and then had the sell-off. Either way, it's on track exactly as Global M2. What it's saying to you is that financial conditions that tightened last year due to the dollar rallying in anticipation of Trump and also rates going up in anticipation of tariffs, well, that is what's playing through now. Now, if you look at the chart going forward, that reverses. Yes, there's going to be a period of chop. We're going to be finding the lows around here, and I'll come more on that in a sec. Then there's a period of chop, and then we start coming back up the other side. So it's nothing to concern yourselves with. Volatility is part of the game. Without the volatility on the downside, you don't get the 150% returns or more on the upside. So anyway, calm down, have patience, let this play out. Solana, I know many of you are in Solana, and Solana got nuked because of the collapse of the meme coin economy. Now, I think Solana, as you know, is a very broad, deep protocol. There is a lot of activity that goes on. There will be other activity that replaces memes. Some memes will come back to life. It is not what people are saying. It's a scam coin. It's a dead coin. It's all fucking nonsense. But Solana has overshot versus Global M2. And that is this last leg of the cycle. So Solana is looking very cheap. And I'll show you a bit more on that in a sec. So that's interesting. Again, you should be thinking about the dips. Solana should outperform Bitcoin for the rest of this cycle and Ethereum too, with Sui outperforming Solana. Those are my bets. Now, I don't want to hear from you saying, yeah, but what about this token and that token and my token's better than your token? This is not a fucking player versus player world. It is a player versus everything. We all want everybody to succeed here. Follow the don't fuck this up thesis. Don't have all of your stuff in small altcoins. Have about 80 or 90% in the main tokens and you'll be fine. But again, this is not a player versus player. We're not trying to outcompete with each other. We're all trying to win here. And that's very important to me.
Raoul Pal has sparked a viral conversation with his bold predictions on the future of digital assets. Have you heard of the banana zone? It's a term he's coined that's catching on like wildfire. While we won't spill all the beans just yet, let's just say that Pal's insights are challenging everything we thought we knew about economic cycles and the potential for a sustained bull run. Are we on the brink of a period of rapid growth, or is there more turbulence ahead? Welcome back to Investocracy Crypto.
So it's yet building a more positive case. No, it's not going to be a recession. All of that talk is nonsense. Economic data will weaken for a bit and then strengthen. But this is all good for us. Yes, tech stocks are slightly worried about weaker growth. But again, when we can look forwards, using the analysis, we can see recovery is around the corner. Now, when we look at last time around in 2017, when Trump came in, we saw a very similar thing. Economic surprises fell off a cliff because the dollar had strengthened. in anticipation of Trump coming into office. That then eventually reversed and the economic cycle picked up massively and the dollar weakened hugely. And that drove what was a very large crypto and risk cycle, even though the Fed were raising rates. You see, global financial conditions are the key thing here. And that could be driven by the US, or it could be driven by China, or it could be driven by Europe. It could be any of these economic powers, or it could be all of them. So as the dollar weakens, we're already seeing that mechanisms like dollar yen are starting to move a lot more. Now, dollar yen is incredibly important because the Japanese banking system is the heart of the eurodollar system. They're the ones who lend out dollars into the global economy, and that finds itself its backdoor into China that allows China to service its dollar debts. And if the dollar is weaker, then China can weaken its currency. It can then stimulate more aggressively. It needs to do trillions of dollars of QE to service the bankrupt real estate sector and other parts of the non-performing loan sector. So anyway, that's all to come. If we look at the dollar now versus then, very similar. Trump back then said the dollar is too strong. They've already talked about it, him and Scott Bessent. They've already talked about the long end of rates. What they want is the dollar first, they will use the dollar as a bargaining tool with the Chinese, the Europeans, the Canadians, the Mexicans to get the tariffs in place. In exchange, they will give a weaker dollar. That helps everybody out. We could all then move forwards with the global economy.
In a new video update, Raoul Pal says that the second phase of this intriguing banana cycle could see rapid acceleration in digital asset prices extending into 2026. If history is any indication, this isn't a mere banana-flavored daydream. Pal draws comparisons to the crypto surge of 2017, a year that digital gold and its counterparts reached unprecedented heights.
That tends to be phase one correction of the banana zone. We started the banana zone in September, October, November. Then we start correcting. We continue to correct, and then we take off again. That's all to play for. It's very normal. It's playing out like a very typical cycle. The other thing that drives all of this is the business cycle. See, the business cycle is driven by financial conditions, liquidity, all of those things. But this is how businesses do when financial conditions get easier. The ISM survey above 50 shows the economy is starting to grow. Now, economic growth has been strong, but that's been driven by the government sector. But again, Trump and Bessent have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin. So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle. But if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. Now, again, I don't use forecasts because you guys don't deserve them, because you use them against me and say, well, you predicted that. I'm not predicting. What we're trying to do is give you contextualization of how the market can evolve so you can play along from home. Rising ISM will be good for your bags. And rising ISM it may still be choppy because we're still coming through. We need rates to go lower. But as that happens, we will see this pick up. Forward-looking indicators of ISM, like ISM new orders less inventories, leads by 3 months. It's going up very sharply.
Pal discusses the cycles of upswings and downswings, suggesting an overarching structure in economic activity that may prolong this cycle even further. Pal's predictions don't just sound compelling, they pack a punch with data. He notes that the business cycle is expanding now and will be extending to 2026. This outlook leaves investors both anxious and optimistic, a curious mix that mirrors the market itself. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So, altcoins should outperform in the next phase once we get out of this corrective phase. Okay, let's look at these corrective phases. If you guys have got this far and followed me, We've gone through 1, 2, 3, 4, 5, 6, 7 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all fucking noise, kids. Really, honestly. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5 30% plus pullbacks, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle. It's more like Ethereum. It's more like others. So this gives you the contextualization of what you're going to have to stomach to make the money. To unfuck your future, you're going to have to learn to deal with volatility. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off. But we're far too early for that yet.
As we come full circle on this captivating journey through the banana zone and beyond, Raoul Pal's predictions have served as a beacon for both seasoned investors and newcomers alike, eager for direction in the wild world of digital assets. While caution must always be a key player in investment strategies, Pal's insights suggest that now might be an opportune time to dive into the crypto pool. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.